here from WallStreet IO, the #1 backtesting platform for swing traders, with a quick update for you today. Right now we have an amazingly bullish payday cycle in our hands. Last week we had the beginning of a new cycle that continued throughout the entire week, and every day we continued to hit new daily highs, which, as you know, is one of my key metric systems. So when you're looking at a new cycle, payday cycle, you could ask yourself, are we hitting new daily highs? Are we continuing to close at new daily highs? Well, we had a very strong bullish payday cycle, and every day we hit new daily highs. Now, what's interesting is the week before, if you remember my video, I said a couple things. One is I said that it looked like we had found a support system here just below 170, and that we had formed on Friday potentially a reversal piercing pattern. Now, I honestly did not think that we were going to have a knock your socks off rally like this, that we did. But we did, and sure enough, come Monday, this was kind of the clue actually, Monday morning, is we gapped up and over the 175 resistance. Actually, 175 technically is right there. So whenever we have a resistance point and we have a gap above a resistance point and then it takes off like this, that's a really good sign of directionality in the stock. Well, Apple, sure enough, gaps above my 175 over under resistance, continues to jam all the way to a high of 187. Absolutely incredible move here from the stock. You can also see we're currently 1, 2, 3, 4, 5. We're 5 days into this bullish payday cycle. Okay, and the move above 175 was kind of the clue there. Couple things to kind of consider as we move forward. I was looking at the stock this morning, kind of doing a little bit of analysis, and interesting enough, we did clear 185. Now, what I'm going to go ahead and say is, if this coming week, if we can't sustain above 175, that would potentially put us in a channel between 175 and 185. If we can hold 185, then the next line in the sand is about 195. Okay, a few dollars higher. Okay, so 185 is going to kind of be your more or less your little over-under area. Now, this year so far has been really, really good for the stock. We've basically been in an uptrend since the beginning of the year. The MACD has been bullish for the majority of the time as well. We did, of course, have this little cross to the bears, but that got kicked right in the pants as soon as this last week kicked off with the gap above the 175 resistance area. And so far, it's been a really, really good year. I do want to bring up a couple things. One is the Qs. The Qs also participated in a new swing high, which was really good. And if you take a look at this, it's kind of interesting. Look where the Qs are right now relative to their all-time highs. 177, 178, 187 all-time high. We're really close, actually, to new all-time highs. And I find it absolutely incredible, the move that we've had already just in the last 6 months. Basically went from 187 down to 145 and then all the way back up. Absolutely remarkable move. Now, April is right around the corner. We're going to be finishing up March before we know it. Let's take a look at April seasonality. Normally, April, just over the last few years, is still good for the Qs, but not as good as February and March. Let's take a look at Apple. Apple, again, usually pretty soft in April. February, March are usually pretty good months for the stock. April's usually a little flat. Let's take a look at the SPY. SPY for seasonality, you can see April's usually a little soft. So we could still have a little bit of rally left on our hands for the rest of March, and then maybe a little softening in April. Now, as many of you know, I accumulated a ton of stock on this last pullback. And I bought Apple at 154 down in here, about 300 shares. And I've been selling covered calls, which has been working great. Now, I'm going to go ahead and let my stock go at the 180 strike. They're now on the money. I got a lot of great cash flow over the last few months from covered calls, and I'm going to look for a better buying opportunity. That's going to raise a ton of cash for me because essentially at $180, 180 times 300 shares is $54,000. So I'm going to have a ton of cash that I'm sitting on, and I'm going to look for potentially an opportunity in April if we get a pullback to deploy that back into some shares, and then always swing trading options with it, of course. And in this last pullback, I also bought Facebook down at like 140. I bought Alibaba at 138. I bought Netflix at 270. I bought Nvidia, hasn't been doing as well, about 150. I bought about 5 or 6 stocks. And so far, it's been working out really, really great this year so far. And it kind of brings me to another point, kind of a new point here, is that, when you look at how fast this market rallied, I have an idea that I'd like to present to everybody. And, feel free to email me and tell me that you think it's amazing or, you think it's total malarkey. But here's what I'm thinking is, we've been rallying for 10 years, right? Since basically March 2009. It's March, 2019 now. It's been 10 years. And they're calling it the everything bubble right now. And, for a long time, for at least 3 or 4 years, people have been calling for this giant, long market crash. And, well, it just hasn't happened. However, we've had some mini crashes. I would say I traded the flash crash of 2010. We also had another one here in 2015. We also had, a pretty big decline in January 2018 and a really big decline in October 2018. So here's an alternative to a giant, 6 to 12 month crash. Is perhaps what we end up seeing is a continuation of what we have been seeing, which in reality are these short 1 to 4 week market crashes that pulls back 10 to 20%. This pullback here was about a 20% pullback. That's enough to stop a lot of people out, get a lot of people spooked. And, sure enough, within a month or two, the market rallies right back up. VIX drops back down. And so perhaps for the market to more or less reset, does not require any longer, doesn't no longer require this 6 to 12 month pullback, but perhaps maybe just a 1 to 4 week pullback. And that's kind of what we've been getting. So while my idea is nothing new, because it's really just an analysis of what has been occurring already in the last 10 years, I just wanted to bring that idea up. Because this last pullback, I deployed a lot of capital in stock. It's kind of rare for me because usually I swing trade options. Now, I'm still doing swing trading with options, but so far that buying stock on big pullbacks has been a great strategy, right? And I just wanted to bring that to light. Now, of course, we'll be able to talk about that more in our Monday meetup tomorrow at 2 p.m. Eastern Time. Feel free to ask me anything about the market, about trading options, or about this idea that perhaps we won't get this 6 to 12 month pullback in the market, and it's just going to be these little crashes, and we should be taking advantage of those when they occur, like we have been. So in any case, wanted to throw that idea at everybody, see what y'all think. And that is a wrap for today. So on behalf of the entire Wall Street IO team, I wish you good trading